and here we go. All right. So this is, what is the date? 2nd of October, and it's in the afternoon of a typical market day. So I'm going to put Discord off to the side, and I'm going to take a look at some charts here. Okay, let's go to the indexes first. And we've gone red to green in all four of the major indexes. The small caps are flat, I have to say. The Dow is almost flat. Same for the S&P. NASDAQ leading the way higher, up 37 basis points. And it's always good to see the NASDAQ or the small caps leading the way higher, if not both. So let's take a look. Let's just go with SPY first. We've been looking at this chart now several days in a row. We've got everything in an uptrend. We've got the stacked MAs, 21 above the 50, 50 above the 200. The market bias indicator is a dark green, which is a strong uphill uptrend. And we've got a little pullback here, nice little pullback, soft pullback to the midline of the LRC, the tag of the 21 period moving average. And it is held this morning and bounced cleanly off of a former all-time high pivot, and got close to that a few weeks ago and kind of got stuck there a couple of weeks ago. This was the Fed chair day, right? Powell came out, cut 50 basis points, and the market sold off very sharply. Because it was up here on the knee-jerk reaction, came all the way back down on heavy volume, and everybody and their grandmothers, I've said several times, got short there, at least put on some hedges. We did not, because I just wanted to wait and see what the overnight reaction was, and the overnight reaction was, in fact, very good, very bullish. Right up to new all-time highs. A little bit of a consolidation. Here's your distribution day, so a little bit of heavier volume up there at the top. On an intraday basis, actually on a closing basis, it was a new all-time high, and that marked the highest high. It's not the highest closing high, but the highest intraday high we've seen in the history of the S&P 500. And it's been kind of downhill ever since, but this is a soft pullback. It has already held support. We've got stochastics already down to the 20. I mean, that's very quick. Price hasn't fallen that far at all, maybe 1 or 2%. But the stochastics, because of the strong range that it's been trading in, i.e. really big highs, not very big lows, it doesn't take much for the stochastics to go all the way down to the 20 level. A 50 mark for stochastics means it's trading right in the middle of the recent range, and if we get all the way down to 20, it's down in the 20th percentile of the range, the lowest 20th percentile. So that's usually where we see some of our best buy signals come from, when the stochastics is down below that green line right there. Conversely, on the upside, stochastics is not a very good indicator to give us an overbought reading. Stochastics can get up above 80 and just keep on going higher. And sometimes it will still go higher with stochastics falling. It's just not going up as fast as it was before. And so if you're trying to short the market because of a high stochastics, you're more likely to run into trouble. But if you're buying the market at the low stochastics, you've got, especially in an uptrend like this with stacked MAs and everything else going on, that's a good place to be. I'm not going to kick anybody in the pants for buying a low stochastics in an uptrend. I did want to show you that making new all-time highs in an uptrending market, some people think, oh, this is the time to go short. This is the time to bank everything out of your, get out of your stocks, roll everything into bonds or cash or money market funds, and let's sit out the storm when the market gets to new all-time highs. No, not at all. One of the things I learned from William O'Neill is that when markets are high and making new all-time highs, they tend to go higher. Yeah, they can consolidate like this one did, like a nice little soft pullback, which is like the one we're in right now. Nice little soft pullback, big leg higher. Sideways consolidation, big leg higher. Okay, now this was a much more sizable pullback. We always have to be on the alert for that. It can happen at any time. But this was on, among other things, this was on the Japanese yen trade, and also some signs of recession. And there was some fear. There was a lot of fear, in fact, that the Fed was not going to cut rates by the end of the year in that area. So there were reasons for the market to pull back. We don't have those reasons now. The Fed is a tailwind, not a headwind. Recession is not a problem. We just saw this morning labor doesn't seem to be a problem. Signs of recession, yeah, there are a handful out there here and there, but really in all the key indicators, not a whole lot. And yeah, the market is really just kind of being given the green light here. Does that mean it's going to go up, 10% in the next week or so? Probably not. Probably not at all. Much more likely as a path of least resistance is going to be, kind of testing the lows, testing the range highs, maybe another month or so, pricing in the election, maybe reactions to earnings that are coming out. The big earnings are all coming out in a couple of weeks, starting to come out in a couple of weeks. And yeah, there's a lot for the market to kind of contend with. But a big pullback all the way to the 50, probably not. Down to the pink zone, probably not, unless we get some catalyst that the market isn't looking out for. And that's always possible. Jobs data coming in on Friday is going to be very closely watched. It's kind of an interesting dilemma for the Fed, because one of the reasons why they cut 50 basis points is because they were starting to get concerned about the labor market. If the labor market is still strong, they have less reason to cut again. And their next meeting is not till November, and they have another one in December. So we want the Fed to cut, I would say, at least 3 more 25 basis point cuts between now and the end of the year. 4 would probably be better. So we want the Fed to not run out of reasons to cut. So I guess we can kind of root for a somewhat dovish miss on Friday. We don't want anything too scary. I would suspect something in line, because the number isn't really big that way anyway. If the number can come in line, I think we'll probably be okay for a rally on the numbers, on the hope that the Fed will continue their cutting program. So SPY, really nothing here to worry about. Yes, there was a distribution day yesterday. Distribution day is where you have a red candle where the price closes below the open and it's closing below the previous close, and the volume on that day is higher than the day before. Distribution days are figured differently by different people. I just like to see a bar that's higher than the day before. William O'Neill liked to see a bar that was higher than the previous 10 bars, something like that. So everybody has different metrics for distribution days, but it is a day where you've got more selling pressure than buying pressure. These, however, unless you get a whole bunch of them in a row, or you get a whole bunch of them within a month, they do tend to be one-off events, discounting events, normal part of market give and take. You're going to see accumulation days as well, right? You've got an accumulation day right here. In fact, that is higher than the previous 10 days. That's a very good accumulation day. And that kind of, cancels out the distribution day that happened a few days later. So normal give and take. Volume is important to keep in mind, but the most important thing on this chart right here is the price. Only price pays, and so we'll have to keep an eye on price, but as long as we stay above those lines of support, we're good. QQQ, pretty much the same story, although we're not, trading off of new all-time highs. We're trading underneath that, and that's a little bit of a concern. So typically when a market makes a new all-time high and then pulls back, unfortunately, the NASDAQ made its all-time high before all the Japanese yen trade and the Fed fear started kicking in. So it's got a little more work to do before it gets back up there, because it got knocked down so much further than the S&P did. But it's making its way back, right? So we are in this period of a higher pivot high, and a higher pivot low, which is trending action, good bullish trending action. We tested the 21 period moving average yesterday. We tested it again today. We're holding again, like we did yesterday, above this little line, not a major line here, but a little line of support. And yeah, and we're in an uptrend, right? We've got the stacked MAs. All is good. The stochastics is not down to the 20 just yet, but it's falling. It's getting close. And we're in a strong market bias. According to market bias, we're in a strong trend. So all good, all good. Distribution day yesterday, like the S&P. Here's your accumulation day on the same day. So it's all good. It's just going to be, it's going to be 2 steps forward, 1 step back for a while, I think, until we get, I would say, later in the month, later October. We're going to get a few of the banks, their earnings out of the way. We'll get a few of the mags, their earnings out of the way. We'll get more CPI, more PPI readings out of the way. And then we'll get the seasonality over with. It's October 18th is supposed to be the bottom of the September swoon, right? September swoon starts around mid-September, goes on into the first 7-8 trading days of October, and then it's kind of flat or choppy for a while. And then on the 18th, boom, everything goes up. But that's seasonality. Those are averages, and seasonal averages are not bell curves. They are like barbells. You've got a lot of big data on the extreme upside and big data on the extreme downside, and not a whole lot at the average itself. So just keep that in mind. When the averages are broken or violated, the seasonal averages, when they're violated, they tend to be violated in a very, very bullish manner. That is, the seasonal weakness, when it's violated, tends to be violated in spectacular fashion to the upside. And I think that's what we're getting here. Not necessarily spectacular, but will certainly be, unless things crash in the next 5 or 6 trading sessions, we certainly should close out this period with a bullish upside. So that's QQQ. Nice little reversal candle here. Volume very light today, still very light. But of course, the QQQ SPY, but for example, SPY yesterday, QQQ too for that matter, I'm sure. But when we were looking at SPY yesterday at this time, the volume bar was down here, right? Well below average. And it's not that 40% of the volume came in the last hour and a half. It's that these big index funds, exchange-traded funds, they have dark pool prints that take place in after-hours trading. Those get added on to the bar after the close, and then you don't really know what the actual volume is until several hours after the close. So that's why you can look at this low volume. Well, maybe it's not that low. We'll have to wait and see. Small caps, not horrible today. We are holding the 21 just barely. We tagged or got just slightly below yesterday's low, yesterday's intraday low, but we're staying above the 50. It's still in an uptrend, according to market bias, a strong uptrend. We've got stochastics almost down to the 20 level, and we've got stacked MAs, and yeah, volume balance recently not real good. All these down days are just pretty nasty, right? A lot of gap and crap, a lot of gap and go, just not a good stretch for the small caps. I love this bar right here. This was a very good bar, right? So it got up above the breakout RTL, the resistance trend line, held it early, rallied up to near the highs on the close, nice big green reversal at the midline of the LRC, and then it was all downhill from there. One of those, very disappointing reversals, but it happens. So little modest reversal today. I don't think we're even green right now. Yeah, we're slightly red. Hey, if we just can kind of carve out a sideways trading range over the next few days, just not anything too extreme up or down, that would go a long way toward improving the structure of this chart. It's just a bit of a mess right now. TLT is hanging in there, right? It's up at the highs of the day, came all the way down to test the very bottom, the very outside edge of the 2.0 standard deviation, and rallied from that moment on, rallied all the way up to the high. We're starting to close the gap. It was a big gap today, but of course the bonds tend to gap overnight a lot because they are traded abroad. And we're almost back to the 50-period moving average. This looks very good. This looks very good. And of course that helps our TMF shares because we're long. We're in a covered call with that one. Okay, go over to my greens list. You'll see a few new members here and a few that were on yesterday that aren't here today. So I still have my ASTS. I don't know why I do. Fundamentals aren't great. It did. I mean, it got me into the trade on that green bar because there was a lot of unusual call flow coming in, plus the big bullish engulfing candle, uptrending LRC. Everything looked very good for a reversal pivot. You know, buy the green in an uptrend, sell the blue in a downtrend. Follow through the next day. You got even above the RTL for a little while, and then it's been all downhill from there. We got stopped out yesterday. I'm still holding without a stop. It's a light lotto position. I'm not worried about it, but I just have this feeling like it still has a chance. Still has a chance. And I know once it breaks out, because there's a heavy short position here, once it breaks out, starts clearing out some of these intraday highs, it will get a good squeeze move, but we'll see. Wix is a good-looking setup here. Now, these big red sticks that get like a 50% retracement the next day can be problematic, so have to be a little careful with this one. Here's a big red stick, looked pretty good for a couple of days, and then it was right back down again. What I like about this is that we did tag the support line. We bounced cleanly today, and we're making our way back up into the 50-period moving average. So it's not a great setup because of the big slam. You got to remember that when you've got pullbacks, ideally should be soft, right? Not a vertical drop like a waterfall, and especially not like this one with a big red stick. But I'm just going to keep this on my watch list, and maybe if we can carve out a little base in this area here, we can get back on board. Labu, we bought this one. It's well above our entry price, so it's reversing nicely. There it goes again, 125.50. Reversing nicely above the 200-period moving average. It's above the STL. It doesn't have very good volume balance. A lot of distribution on the way down. That's going to be a problem. So we have to keep a close eye on it, but we'll just keep moving up our stop. Technically speaking, on a price basis alone, this looks very good. We also have a higher low in the stochastics. It looks almost like a double bottom, at least it was at the low. So a little bit of bullish divergence there as well. It's not a perfect chart. We aren't going to find too many perfect charts out there, but as a pullback play, hitting support, uptrending, in the context of an uptrend, this is a nice looking reversal pivot. So we'll do that one with a fairly tight stop, and we'll see where it goes. Apple, better today than yesterday. Nice looking reversal bar above the 21, trying to get back above the RTL. I have to say this whole area right in here is a mess, right? This is very frustrating for a swing trader. Same with this right in here, same with this right in here, same with this right in here. Apple's been doing that because, I guess, of indecision around the iPhone 16, not a great rollout. Numbers aren't that great, but it is Apple, right? And people like to buy the dip in the Apple. So I'm not a buyer just yet. I want to see this kind of come to an end and to get back on track. And it's got some good potential here to do that. But it's not a buyable play just yet. So we did buy NVIDIA, and it is NVIDIA, and it's going to have some trouble getting up through some of these levels here. So as I said in the room, we'll keep a tight leash on this guy. But anytime it's NVIDIA hitting the 50-period moving average and reversing, it's worth at least giving it a shot. And There was some good news out on NVIDIA today as well. It's kind of a partnership. I'm forgetting the details, but that's always helpful to have a macro tailwind helping out the trade. So our first target is going to be the 122. It's just really light resistance, not very big. This resistance trend line is going to be a tougher go. That's around 125, 126. And if it can get through that, we should see this 130 come into play. 130 is going to be the real tough one to get through. We went long Avgo as well. This is a nice looking setup. This one, as opposed to NVIDIA, doesn't have nearly as much overhead. It's got a stronger chart. It's more of an uptrend. We didn't get down to the 50. We only got to the 21. Stacked MAs, strong market bias, oversold stochastic. Everything looks great on this. And the volume balance is pretty good. Here's your pocket pivot on that big green bar, that breakout bar right there. It's not really a pocket pivot, I wouldn't say. It's a breakout, but huge volume that day. That's always good to see. Huge. Shop, still on my watch list, kind of going sideways, but not bad. This reminds me of Carvana, similar kind of setup, right? Well, maybe not, but they're both in uptrends. And they're both kind of going sideways. Carvana is a little stronger. But I like the fact that this is coiling. It's kind of like a bull flag. And yeah, every red bar has been reversed the next day. So that's a good sign. XBI, this was my free pick in the weekly letter today. I like this. We can give you a bigger picture of it. In fact, let me show you MarketSurge, which I think is a little bit better. I was looking at uranium plays because there was a lot of buzz around uranium plays, especially these little guys. UROY, and there are a couple of others. CCJ, of course, is always your best of breed in the space. And we're along the nuclear play, which is doing really well. NNE. What was I going to type in? XBI. So here, if you draw a line over 103.50, connect 103.50, same pivot price, you're going to see an absolutely straight line of resistance on the top. And then if you mark down here 81 and tag 91.90 and tag the most recent pivot low, you're going to see a nice sequence of higher lows. That's my favorite pattern for technical pattern, right? You've got resistance up above, same level, can't get through. But price is getting closer and closer and closer to breaking out. And if you can get in at the support, you've got a very, very low risk trade with high probability of being a breakout move that can really get going. So I love this setup. I may get us into calls on XBI. There was some interest in, I think it was the January 100 strike. Or am I thinking of? I've looked at so many different option flow possibilities today, so I'm not sure I've got that right. XBI. Chewy, still kind of watching this one. It's still sliding lower. Not a setup yet. We need to see it prove itself. Google looked pretty good yesterday, not so good today. We're back underneath resistance. So it's going to take a little while, I think, for this one. In fact, you know what it looks like it's printing here is something like a Head and Shoulders. If that's the case, then we don't want to be in it for a couple of weeks. And it's got earnings really pretty much after that. So it might not do much of anything until earnings. We saw Carvana. Amazon, it looks great. It's not in an uptrend, so I shouldn't say it looks great. I take it back. But as a pullback play with a reversal bar today, this was above the 200 a little bit earlier. It's not now. It's looking like, and with this deep stochastic, that was the thing. Deep stochastics all the way back to mid-July before you find another stochastic reading that low. And that tends to help. We've got some good accumulation on the way up. sequence of higher lows, higher highs. So it's not horrible here, but not really getting too much traction yet today. AMD, false breakout, so that is a bull trap, and it is still in a downtrend. It's not really that great of a chart. I have a wheel play on AMD. Where am I at with that? Yeah, it's right at my strike right now. I'm at the 160 strike, and it's at 160 and change. So I don't really want to be put the shares. I'm probably just going to close this one down. I've just been in it a couple of weeks, and anyway, enough about that. I'm not going to trade DPST again. In fact, I'm going to take it off my list because now it has broken support. I didn't realize that. TMF, we saw that one earlier. Yang. So this is interesting because massive volume, right? China has just gone up and up and up, 20, 30, 40%, and some of the leveraged ones double in the last couple of weeks because of government intervention. This is the first day, well, maybe second this week, Monday and again today, when we've seen this massive inflow into this bearish fund, 3x bear fund on the big China blue chip stocks. So that kind of got my interest. It's not giving me any real reason to buy here other than some divergence in the stochastics, but that's not really that interesting. Everything is, of course, still in a downtrend, just like everything bullish is in an uptrend for China. But I think we may be coming to the end of this first leg of the Chinese recovery, if there's going to be one. And I suspect that some of the realities of their likely recession are going to start to make themselves known, and then people are going to get scared out, right? All the new longs that got long this week, especially the guys that got long today, and there was a lot. There was a lot of bullish call flow into Baba and Baidu and a bunch of other Chinese names, PDD and BILI and others. Those guys are going to get scared out like crazy if it does anything like a reversal or gaps down tomorrow. You're going to see a lot of guys get out. So I think people that are buying today are probably playing into that fear that's going to happen because of all those new longs that got on board. So let's keep an eye on that. I mean, maybe an unofficial lotto trade. It's only $3, right, per share. We'll see where that goes. CRM and Now both look good. CRM a little better than Now. This is the enterprise software biggest one, I think, or is Now bigger? I think Now might be bigger. Now looks very good, right? It's uptrend, stacked MAs, soft pullback into the 21 period moving average, deep oversold stochastics. This should get a nice little rally heading into earnings. The only thing I don't like about it is this gap right here. When you get a gap off of all-time highs, as I said about Tesla, it often does take some time, a couple of weeks even, to for this to get back on track. And there may be something systemically wrong with the company that the people that were getting out on this day realize, nobody else realizes yet. And so sometimes these gaps these gap downs on all-time highs, or even 52-week highs, or even 6-month highs, can be real deal killers for the next few weeks or even months. In fact, I have a trading system that trades this very thing, right? You find the new all-time high, new 52-week high, you look for the gap down, and then you short on a break of the low of the gap down day. And so you would be in at right around 885 and change. Okay, so still looks good, but that's the one cautionary thing in that chart. And then CRM is just good all around. It's a breakout move. Volume balance in a recent trade has been good, and it's up big on a very mixed market day. Where are we at with the market, by the way? Let's take a quick look. Starting to bounce back. We're holding just a smidge above yesterday's close. S&P right at yesterday's close. Small cap not doing too badly, right? Every little dip is getting bought back at least modestly. But this is the number that is a little bit of a concern. 52% of the stocks are down today. And we're going to need to see that number improve before the close to give us a good chance of a good, healthy rally tomorrow. If we don't see that, then it's probably more of the same. And I think that's probably going to be the path of least resistance until 8:30 Friday morning, right? Tight, choppy, trendless, just like today. Last thing I want to do with you is go over MarketSurge. I'm an IBD partner, by the way, Investors Business Daily Partner. And this is my favorite product service. I also am a big fan of their leaderboard, IBD Live, their investors.com website, which is a really nice one-stop shop for all things stock market related. And even just going to the IBD site, a lot of it is free. You're going to find free research. You're going to find the IBD Top 50. You're going to find the stock of the day, all kinds of good stuff to sort of fill out your portfolio. But this is my favorite tool. The charts themselves, I have to say, maybe a little bit clunky in the sense that they're not as flashy as TradingView, and they don't have as many indicators that you can throw on there for fun. But on a pure price basis, they work really well, and they do give you pattern recognition with entry level, stop loss, and target price. And it's per the IBD, per William O'Neill's CanSlim system, the technical part of it. So they're all you get a double bottom, you get inverted head and shoulders, and you get cup and handle patterns, all recognized on the chart. Here's a big cup and handle, right? Here's your cup. Handle is forming. It hasn't completed yet because it's got to get above the neckline of 103.52. But that's what I like. So, but the best thing about MarketSurge are the scans. I'm going to run my A-list scanner. And right now there are 25 stocks that pass through the filters. And I'm not going to give away the filters here because I did that already in my IBD Live interview. And if you want to find that, there's a link somewhere in our room to just that segment where I'm going over this screen and the parameters of it. So if you want to create this screen yourself, I'll find it. I'll find the link again and resubmit it. But if you want to do this very same thing yourself, you can watch that video. You can take a cheap $50 trial, so it's $10 a week for 5 weeks of MarketSurge. And hey, if you find it useful, you can continue. It's not cheap, I have to say. It's like $125 a month. But if you find it useful and you're finding good stocks, and I'm going to show you some good ones, then maybe it's worth it for you. So ran this scan, and 25, that's about average for my A-list scanner. And one of the things I like to do is keep note of that number right there. So if I run it, say, once a week, and the numbers are going down, I know that we're in a less robust market. And even if the indexes are up at all-time highs, if I'm seeing this number go down, I know that underneath the surface, things aren't good. Because in order to get into this filter, get past all the filters for this scan, you need to have very strong sales. You need to have increasing margins. You need to have accelerating EPS growth. You need to be in favor with the analysts. You need to be raising your estimates both this year and next year, all kinds of good stuff. And if there aren't as many stocks passing all of that, we know that there's some problems going on. And conversely, too, if you see that number starting to go up, we know that, and maybe the market's been in a trading range, we know that internally, underneath the surface, things are getting stronger. That's always good. All right, let me go up to the top of the list. I'm just going to go through these. Some of these have better setups than others. This is a nice one. I like this one. So this is a gold play. It is right at the top of my list, and these are sorted by comp rating. That's sort of your overall score. And all of the ones here at the top are 99s. Doesn't get any better than that. So you had the breakout a couple of weeks ago. I don't know if that's all-time highs or at least 52-week highs. Pull back into the 20-period moving average. Nice-looking big volume reversal yesterday on a down market day. That's a big green flag as far as I'm concerned on this one. And clinging, hugging the 21 period moving average. Yeah, we don't have oversold stochastics yet, but we're down below 40. That's a pretty good place to be. And yeah, this looks good. This is ready to go as a gold play. C1, this one, I'm forgetting if, are we in this one still, or we were in this one, but it was in my trend trade letter, at least for a while. 52-week breakout, might be all-time high breakout, perfect IBD metrics over here, great looking growth numbers. And just like the gold play, this is not gold, this is a fintech play. Down to the 20, holding the 20, almost ready for a reversal. We don't have a, we need to see a blue candlestick. We don't have that just yet, but watch for that. That's a good one. We were in this one here in the room a couple of weeks ago, and it's only gone higher, as usual. I have a knack for selling winners too soon. It's the one area that I just have not been able to overcome. I'm much better. In fact, I think my trading record per trade is much stronger in the letters because I'm not watching those all throughout the day. I only get to those after the market is closed, and then I adjust the stops and all of that. But so I'm in those much longer, tend to hold my winners much longer, whereas here in the room, I'm watching the ticker all day long, and I get caught up in some of the enthusiasm, and I'll sell into strength, and then it just keeps going higher, or maybe a little bit of an intraday algo-driven sell-off, and I say, let's take our profits and get out, and it just goes higher still. Anyway, this is a good setup. It's a breakout trade. It's not a pullback trade, and it is up here at blue sky territory. Everything is rising. This looks very, very good. We still have very good fundamentals, fundamental strength, good valuations in this one. This is an aerospace defense, so not a bad play given the geopolitical tension right now. Ryan Specialty Holdings is insurance. Insurance has been a very strong sector. It's up here at all-time highs, breaking out today. So per IBD, this is now flashing a buy signal. So you get the little buy zone right here, that blue zone. You can buy it anywhere in that area. You put your stop loss down here, and your target price, it's not showing on the screen because it's up too high, but it's probably up about 85 or 90. It's like a 20% margin to the upside. Yeah, this looks good as a fresh breakout move, and you could even call it a cup and handle, right? Here's your little handle, not a big one, but a little handle, and you can see the cup is a 10% depth. When you hover over it, it gives you that 10% depth, so your target price would be at about 10% to the upside. Let's just do a couple more of these. Trading Web. I don't think we've ever been in this one in the room, but we've been in this one in the trend trade letter, and haven't been in it for a while. Very, very nice move. So breakout, continuing higher. It's not really a buy right here, but it certainly is a hold. And we'll do one more. Vertex. Yeah, this is the software play, not the biotech. There are two stocks with the same company name, but different ticker symbols. VERX is the software. Excellent fundamentals. Yeah, this is just a great looking company right here. And fresh buy breakout today. So anything above 40 is a buy. Your stop loss is down here around 37. And your target price would be 20% higher. All right, guys. I'm not going to take any requests. Although, let me just take a look at. I know you got. Sorry, you did type in some ticker symbols. Let me get rid of this guy first. I'll take a look at Stoxx, and I'll tell you why we went with NVIDIA instead of this one. And this looks a little too much like AMD, only worse. So everything is downtrending, right? You've got the 50 falling, the 21 is starting to roll over, the 200 is above everything. We're below the 200. LRC is falling. Couple of big distribution days in recent trading. And the only thing I like about it is that it is reversing on an inside day bar at the 50-period moving average. That's the only good thing that we see right here. So as a sector, semiconductors per this chart, let's take a look at SMH, which is the non-leveraged version. Oh, okay, well this is actually a little bit better, right? The downtrend is not so bad. The 21's above the 50. The price is above the 200. Actually, the MAs are stacked. This is interesting, isn't it? So you can see how the leveraged bullish fund sort of outpaces to the downside the underlying index itself, because this is not a horrible setup. This looks like NVDA. This looks like NVIDIA. SOXL looks like AMD. Very similar. In fact, this also looks a little bit like, if we put this pullback line on here, it's going to look a little bit like AVGO, right? Yeah. Yeah, so SMH not too bad, but I don't like Stoxx. It just has way too much overhead resistance that it's got to work its way through. I'd rather drill down into the sector. We've got AVGO and NVIDIA, probably the two best right now at the top of the list, and we'll just go with those. All right, guys, I'm going to let you go. Have a great rest of the afternoon. I'll see if I can get this link of the recording over to you, and hopefully that works. If not, we'll try something else. God bless. See you soon. I'll be back in the room in a little bit. Bye for now.